This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. Yes, indeed, this is Bloomberg Businessweek Daily. Carol Massar along with Tim Stenovec live here at Bloomberg headquarters. We do have stocks bouncing around a little bit, but Tim, they have been hovering near a record again amid mostly positive earnings and an expected hope for an inflation print on Friday. Yes, even though the government is shut down.
Also, gold and silver posting their steepest drop in years. We're going to have more on the trade in just a minute. And a reminder, Carol, we got some big earnings, too, after the bell.
Yeah, let's just bring up some boards real quickly because gold, we definitely have seen some big moves in today's session. I think we see gold, as you can see, down about 5.6%. Same thing, we've seen silver pulling back. We know that this has been a rather dramatic trade for some time. So we're going to dig into all of these market factors throughout the next 60 minutes. We're also going to get into the U.S. assist for Argentina. Why now? What might it really be all about? We've got a great voice on that. Our own Erik Schatzker settling in here in our studio.
Plus, as I mentioned, lots of earnings happening after the close. Netflix is the big one, reporting results amid a changing media landscape that includes Warner Brothers Discovery shopping itself around. Bloomberg's Lucas Shaw is going to be joining us fresh off that conversation just a couple of weeks ago with Netflix co-CEO Greg Peters. And yeah, they talked about the potential for making a deal.
All right. And then we're also going to get into working towards financial security to create an inclusive economy. All of that coming your way over the next hour of Bloomberg Businessweek Daily. Let's kick it off with a check on the trade. Here is Alexis Christoforous.
Busy day, guys. Thanks very much. Yeah, all the major averages hovering near their record highs, but the Dow Jones Industrial Average really adding to yesterday's big bounce, up now about 300 points. The broader market, S&P 500, it's up about 10. The NASDAQ Composite has been bouncing in and out of the green, now down about 9 points. We've been mentioning it all day, but gold is getting knocked down after going on that spectacular record run. It is down now about 5.5%, biggest one-day drop in about 12 years. We've got the stronger dollar making gold and other precious metals more expensive for buyers. Coca-Cola's earnings beat the street, shares bubbling up now about 4%. It's helping to lead the Dow higher as well. Coke reporting strong demand for its zero sugar drink. It's also set to launch its cane sugar trademark soda here in the U.S. this fall, and it's going to start offering mini 7.5-ounce single-serve cans priced at less than $2 to target lower-income consumers. We've got shares of 3M hitting a 4-year high today as the parent of Post-it notes and Scotch tape posts better than expected quarterly sales and profits. It also increased its full-year outlook. Shares of 3M up 6%. And Netflix near the flat line here ahead of its earnings report due out after the closing bell. Results expected to get a boost from advertising revenue and the K-pop animated movie K-pop Demon Hunters. Oh, by the way, Netflix is reportedly among the companies interested in buying some or all of Warner Brothers Studios. Told you it was a busy day. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Send it back over to Carol and Tim.
All right, Alexis in for Charlie Pellet. Yep. Alexis is right. It's a busy day. Kind of don't know where to start. Oh, actually, we did know where to start. We wanted to talk about what is going on between the U.S. and Argentina. We did mention that Argentina's Peso weakened to a fresh record, and bonds gave back most of their gains as U.S. Treasury Secretary Scott Bessent's latest boost to the nation proved short-lived. The U.S. Treasury signed an economic stabilization agreement with the Central Bank of Argentina, again, coming from the Treasury Secretary Scott Bessent. He put that post out on X, Tim.
The secretary characterized the Treasury's $20 billion swap line with the crisis-prone nation's central bank as a, quote, economic stabilization deal. He said the agreement is, quote, a bridge to a better economic future for Argentina, not a bailout. We have a lot of questions, Carol, and there's one voice we wanted to get on the program today.
He has no idea, but we were like, no, we're going to talk to Erik. We need to talk to Erik. Erik Schatzker is who we are talking about. He's Bloomberg New Economy editorial director. He has covered numerous global financial and market cycles and crises. He's interviewed various Latin American leaders, including Venezuelan President Maduro, former Argentinian President Mauricio Macri, Hopefully I'm saying it correctly. I probably am not. He also had the September cover story on Secretary Bessent for Bloomberg Businessweek. You are the voice we wanted to talk to. Thank you.
You flatter me.
No, I speak the truth. We speak the truth. Why is this happening now? And why Argentina? Why does the U.S. want to do this?
Well, so I think we can unpack this in three ways. One is, why is the U.S. doing this? The second is, what exactly have we got here? And the third would be, how might it all end, perhaps in tears? I'll take on the why, and this actually goes back to that story you mentioned that I did about Scott Bessent, the Treasury Secretary for Bloomberg Businessweek in September. I spoke to the Treasury Secretary back in late July, and at the time, he told me that one of his overarching goals in office as the Secretary of the Treasury was to, quote unquote, lock in dollar supremacy. And I asked him, well, how do you do that? And he said, and I didn't appreciate the significance of it at the time, was by facilitating swaps through the Treasury Department, as opposed to the way that swaps have traditionally been facilitated, which is by the Fed, from central bank to central bank. Now, there is precedent for this. The Treasury Department did that for Mexico back in the mid-90s during the Peso crisis, and it helped. And maybe it'll help Argentina. But it appears that under the Trump administration, the government's focus is on, again, cuts to the why. It's not just about locking in dollar supremacy. It's using the dollar as an economic tool to support countries with which the United States feel it has some kind of ideological kinship or some kind of trading relationship. It's not like Argentina has been one of America's major trading partners. It has not. The amount of bilateral trade that goes on between those two countries is a fraction of what it is with the United States and Mexico, or the United States and Canada, or even the United States and Europe. So in that respect, it's unusual. I think if you think about it, though, in terms of locking in dollar supremacy and using the dollar as an economic tool, and a tool of geostrategy, if you will, it begins to make a little more sense.
You said that there are three different elements that we could talk about with this. One is how. Another one is how this could end. And
sure. Well, let's talk about what is it that we're actually talking about here. You mentioned that the Treasury Secretary today talked about it as a bridge to a better economic future. And
not a bailout.
And not a bailout. But the operative word there is bridge, because bridge means something from here to there. In other words, what's the there? This is a bridge until when, right? Yeah. Is it a bridge until after Argentina's midterm elections on the 26th of this month, Sunday? Is it, Trump seemed to suggest as much the other day when he said, well, you know, if Milei doesn't win, we'll get rid of the swap line. So that's one possibility. Is it a bridge until Argentina decides to abandon the peso peg, which Schatzker, the minister for deregulation and state transformation, said was in the cards just last week when I interviewed him here in New York? Is it a bridge until the $20 billion runs out, which might happen because Argentina was burning through $1.5 billion worth of foreign currency reserves a week, $1.5 billion a week before the swap line was put in place? Is it until Argentina's economy can eventually support an exchange rate at this level? It certainly can't right now. Or maybe is it a bridge until, I don't know, President Trump just loses patience or President Milei does something to annoy him? It could be any of those.
It's a lot of questions. It's a lot of possible scenarios. You know, Bloomberg reported out yesterday that Jamie Dimon is visiting Argentina this week, kind of an unprecedented show of support for the government. At the same time, we've had, I think it's the Wall Street Journal reporting that banks are having a hard time kind of getting around this without some kind of guarantees.
Nobody knows what Argentina is pledging as collateral. In fact, nobody has seen the agreement, to our knowledge.
Right.
The banks themselves, which are playing intermediary roles here, don't know what Argentina has agreed to pledge, so that the United States isn't just on the unlimited losing end of a bad trade. That is possible here, right? The big difference between what's going on here and the comparison that everybody wants to make with the trade that broke the Bank of England, that the Treasury Secretary was involved in when he worked for George Soros and Stan Druckenmiller back in the early 1990s. The big difference here is that then the UK had nobody backstopping them. Now Argentina has the United States backstopping it. But as I say, nobody knows until when. Nobody knows if there are any mechanisms that have been put in place to make the U.S. taxpayer, if you will, whole, should the Treasury Department sustain losses on this trade. I've heard that Argentina's uranium reserves may be involved, that some kind of preferential access to Argentine markets might be involved. Who knows? It's like a ready, aim, fire, or a fire, ready, aim, in the sense that the swap line was put in place, and then it appears, since no document has surfaced yet, that all of the mechanics behind it are being taken care of after the fact. I don't know, but my point is that if anybody knows, he or she hasn't put up his hand to say, hey, I know.
Yeah.
The Treasury Secretary, as you mentioned, described this as a bridge to a better economic future for Argentina, not a bailout. Is the not a bailout part a fair way to describe it in your view? Is this not a bailout?
I think a bailout is in the eye of the beholder. In some respects, it's unquestionably a gift to President Milei ahead of these midterm elections. It isn't working for the time being, right? The peso fresh weakened today to a fresh low, and Argentine bonds, which had gained earlier on the formal announcement of this agreement, have since given up those gains and I think are posting losses. So it would appear to be a gift in the sense that the peso exchange rate, or the peg to the dollar, is unsustainable. Milei doesn't want to allow the peso to float freely. He wants to maintain this peg so that Argentine inflation is under control, a critical economic consideration going into the midterms. So even if there's no question, if the peso peg were to be abandoned today, it's not like inflation would show up immediately, but it wouldn't show up in official statistics, for some time to come. But Argentines are so conditioned to this,
right? They
know what would happen.
Again, I want to go back to, and I know we've got a couple more minutes here, but Erik, the U.S. involvement, and again, it may be a relationship President Trump wants to have with the president of Argentina, but I mean, Bloomberg editors wrote an opinion piece, why isn't the IMF coming in here? And the other question we as a group have been trying to figure out, is it also to kind of keep China at bay? Is there that aspect as well?
Argentina also has an existing $18 billion currency swap with China that goes back well before Schatzker was the central bank governor. I think it may go back to 2015 and perhaps even before that. There has been some talk that one of the conditions behind, or at least one of the underlying conditions to this swap with the Treasury, would be that Argentina somehow winds up that previous swap agreement with the Chinese. Who knows? As far as why the IMF isn't involved, I think the easy answer to that question is, how many months would it take the IMF to get its act together? This was a perceived need on the part of the Argentine government, the Milei government, heading into these critical midterm elections that, I'll repeat, are just 5 days away.
I know, it's Sunday, right?
Right?
Yeah.
There's no conceivable way that the IMF, in my mind, given everything that we've observed in our careers and everything we know that precedes that, there's no way that it could have possibly acted with that much haste.
So before we let you go, how could this end? What could it mean for the U.S. if it's a bad trade?
Well, if it's a bad trade, it could. I find it hard to believe that the United States would put itself in a position to ultimately lose money, but it may lose money on paper and have to recover that money, just like somebody who has been left holding the bag on a bad debt by liquidating some kind of Argentine assets, or somehow, turning preferential access into Argentine assets or Argentine markets into value over time. That wouldn't look good. And again, it all depends on how long this bridge is. We have seen in the credit markets that you can paper things over for an awfully long time before either things reflate and you're able to cash out at par, or you have to ultimately take some losses. So it's not like that's necessarily going to happen next week. It's not like it's necessarily going to happen next month, next quarter, even next year. But if Milei doesn't succeed, and if the Argentine economy doesn't continue to revive and inflation doesn't remain under control, it's hard to see how the speculative pressure against the peso won't continue. And we may even C, I don't know, we can only speculate here that $20 billion may not end up being enough.
All right, we just got schooled by Erik Schatzker in a good way, Thank you so much, Erik.
A pleasure.
So appreciate it. It's what we needed to know. Bloomberg New Economy Editorial Director Erik Schatzker. Hey, quick headline crossing the Bloomberg. Walmart shares just down about 0.4%. This as the giant retailer pausing job offers to candidates requiring H-1B visas. So we're going to follow this and monitor it. You can read more about it. It's on the Bloomberg.
Hey, let's shift gears a little bit and talk about geopolitics, about U.S. earnings, also about what's happening here with the U.S. economy, AI spend, the movement to resolve geopolitical conflicts, gold and silver dropping, perhaps movement in Europe and Ukraine toward a 12-point plan to end Russia's war, and more. Here with the risk factors coming at financial markets right now is Ben Inker, co-head of asset allocation and portfolio manager of the GMO Dynamic Allocation ETF, GMO, along with us from Boston, with all of us coming at it, what matters. What is top of mind for you, Ben? We're just off of that conversation with Erik Schatzker about Argentina. There's a lot coming at investors right now.
Been pretty volatile. They have been jumpy, even though we are near records. And there's a lot of uncertainty about what's going on in the world. What we are trying to focus on when we're talking to our clients is there still are a bunch of interestingly cheap assets out there, which are not priced for, perfect outcomes. So even though there's a lot to be worried about, there's a lot of stuff we find really interesting and are talking to our clients about getting invested in.
All right, not so fast. I'm not going to go to the good stuff yet because we just came off, an important conversation about Argentina. Does that matter to you guys? Are you talking about it? Are you concerned about that? Let's just go there. I kind of want to go through a laundry list. Matter, not so important?
Argentina matters a lot to Argentina. Unfortunately, it doesn't matter that much to the rest of the world, right? Argentina has, staggered from crisis to crisis for most of the last century. They're in another one. It's a difficult situation. I'm somewhat sympathetic to what Milei has been trying to do, but the mechanism by which he's trying to do it, which is fixing his currency at an overvalued level, that it's really hard for that to end well. No matter who you've got on your side, it's really hard for that to end well. I don't think the world will fall to pieces if Argentina finds itself in another debt crisis, because, my God, they have spent more time in debt crises than they have outside of them.
All right, speaking of debt crisis, there are some worried about the U.S. debt fiscal position. We've got a government shutdown. Jamie Dimon saying, hey, it's never good when a government is shut down. Government shutdown a problem, in your view?
It's certainly not great. And the longer it goes on, the more problems it creates. There are, if this goes on further and people, more and more people are not getting checks, whether those are direct government employees or people depending on some of the payments that are going to get stopped soon, that is a problem for the economy. There are things that need the government's participation to happen, kind of IPOs and M&A and stuff like that. So you don't want it to go on for longer than it absolutely has to. I would say the concern is it's not clear how this one ends. It's not clear that either side has shown any interest in budging. So fingers crossed that we can end this relatively soon. But it isn't a problem the first day the government shuts down. But as it goes longer, it creates more problems.
For those keeping track, it is day 21 of the government shutdown right now. Ben, I told you we had a long list that investors are dealing with right now. We have a long list for you. We think about the AI spend quite a bit. We saw shares of Alphabet fall today just on news that OpenAI is teasing a new browser that is AI enabled. We expect to get some details on that a little later today. The AI bubble, or what some say is an AI bubble. I know you think it's an AI bubble. Why should we be concerned?
Well, there's a couple of reasons to be concerned. One is the AI companies have gotten to be a very big piece of the U.S. stock market, and if they fall, that's a lot of wealth lost. I would say kind of the bigger concern for the economy is the aggregate AI spend in the data centers and the energy behind them and all of that is getting to be meaningful across the economy. And there's sort of two levels of concern. One is this a misallocation of capital? Are there going to be significant losses because, we are building data centers that are not going to get used? Or what happens if this does stop? I mean, the nice thing when data centers are being built by the likes of Alphabet and Amazon and Microsoft is they're not really doing it out of debt. They're doing it out of cash flow. So they're not in danger themselves from the misallocation of capital. But the economy has a lot riding on this continuing. And we do think it's gotten somewhat overheated. And some of the deals that one hears about are kind of weirdly and disturbingly circular and suggest that maybe not even all the demand that appears to be there is real.
Yeah, certainly something we've been talking about a lot. I want to switch gears to what we see in gold and silver today, seeing their steepest sell-off in years, investors locking in profits, concerns that the recent historic rally in the precious metals left them overvalued. That's our right through on the Bloomberg terminal. When you look at gold and silver, when you look at some of the different moves in asset classes, I don't know, what is it telling you? Are all of these moves making sense to you based on the fundamental backdrops?
Well, I certainly think that gold and silver kind of had every right to fall sharply after how sharply they rose. I mean, gold in particular is a very speculative asset, right? It's very hard to come up with this fair value for gold. It doesn't have cash flows associated with it. People buy it in the hopes it will go up, or they buy it in the fear that other things will go down. And it has, in recent months, gone up in an unsustainably fast way. Maybe there's some short squeeze aspects of it. And I don't know whether, Diwali has caused some demand to fall off at a time where there is some selling pressure. But when you have a market that becomes as manic as the precious metals market has been, it's going to be volatile, and there's going to be two-way volatility. And the thing about an asset that doesn't have a definable fair value is, man, it can fall a lot if it wants to. The assumption that gold is a long-term store of value, maybe that's true over 100 years. But if you are hoping your gold will be worth the same next year as it was this year, it's a much more volatile asset than anything you'd really want to put those kinds of short-term hopes on.
So Ben, given everything that we've spoken to you about and more, the question of asset allocation comes up and how investors should be positioning themselves in this environment. You're co-head of asset allocation at GMO. And look, asset allocation is obviously personal and depends on where people are in life. But big picture, given that you think we're in some sort of bubble with AI, you're not necessarily buying the gold story. How should people be positioning themselves right now?
Well, look, if there is an AI bubble going on, one nice thing is that is largely a U.S. phenomenon. And Europe and Japan and most of the rest of the world, they just don't have the AI plays. That's hurt them in relative performance the last few years. But it does mean that if the AI bubble bursts, you don't have a lot to lose. We see a lot of good value in Europe. We see good value in Japan. And the other thing going on in Japan that is really spectacular is a revolution in the market for corporate control. There have been more deals in the first 9 months in Japan, private equity type deals, merger deals, than we have kind of ever seen in a similar period. And that has the potential to unlock huge amounts of value for shareholders. So we really are fascinated by and excited about the prospects in both the public and private markets for Japan. And there's a lot of really cheap stocks still in Europe. And we think the European economy has less at stake in the AI game. So I am sure everybody listening to this has the money in the AI stocks as it is. But diversifying some into some of the cheaper stocks in Europe and some of the really interesting things in Japan, particularly Japanese small cap, there's really good potential for returns in both places.
All right. Got to run. Covered a lot. Ben, thank you. Ben Inker, co-head of asset allocation, portfolio manager of the GMO Dynamic Allocation ETF over at GMO.
Hey, it's Ben Lines Crossman, Bloomberg. Some headlines crossing the Bloomberg terminal. Apple's effort to reinvent the iPad by adding a giant foldable screen has hit development hurdles, potentially delaying the planned launch. This according to a report by Mark Gurman. The stock briefly did take a little bit of a dip. It's recovered. Apple shares up right now by about 0.5 percentage point.
All right, back to the markets we go. We do have stocks across the board higher on this Tuesday, but let's get a breakdown of what exactly is going on. For that, we toss things back over to Alexis Christoforous in for Charlie Pellet. Hey, Alexis.
Thanks, Carol. 224 on Wall Street, and stocks are mostly higher amid this flood of earnings reports. The Dow Jones Industrial Average adding to yesterday's big rally, gaining 313 points. The S&P 500 is up 10, but the NASDAQ Composite slipping 14. Yields are lower. The 10-year yield below 4% now at 3.95%. The 2-year yield down to 3.45%. And gold has been a big topic today, down about 5.5%. Biggest drop in about 12 years as investors start to lock in some profits after that record run-up. Walmart has paused offers to candidates requiring H-1B visas. That's according to people familiar with the matter. It's the latest example of how the Trump administration's $100,000 visa fees are disrupting the workforce. General Motors having a great day. Stock is up better than 15%, helping to lead the Dow higher after third quarter earnings and revenue topped estimates. The automaker also raised its guidance and reduced its expected impact from tariffs this year. And what a week for Beyond Meat. After soaring 127% yesterday, it's up another 87% today. That's after Round Hill Investments added Beyond Meat to its Round Hill Mean Stock ETF. Beyond Meat also announcing a deal today with Walmart to expand distribution to more stores across the U.S. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Back to Carol and Tim.
All right, Alexis, thanks so much. Well, Bloomberg's Lucas Shaw and team have been on the Warner Brothers Discovery story for a while now. The latest reporting has Warner Brothers shares soaring as we speak. That stock, what is it, up about 10%, Tim?
Yeah, it's up 9.6% as we speak.
All right, so a big kick to the upside. Here's what's going on. This is after the company came out and said it's considering a possible sale after receiving unsolicited interest from multiple parties. Netflix and Comcast are among those weighing bids for parts of the media and entertainment company, according to people with knowledge of the matter. So it made us say, wait a minute, because did you forget? Netflix co-CEO Greg Peters caught up with Bloomberg's own Lucas Shaw at Bloomberg Screen Time just earlier this month. Check it out.
There's been some reports around you guys being interested in Warner Brothers Discovery. Is there any truth to that?
I would say this, we come from a deep heritage of being builders rather than buyers. I also think that it's, one should have a reasonable amount of skepticism around big media mergers. They don't have an amazing track record over, the history of time. So, I would say it's our responsibility to evaluate all our options.
There's Netflix co-CEO Greg Peters with Bloomberg's Lucas Shaw at Bloomberg Screen Time. That was back on October 8th, less than 2 weeks ago. Let's go to Bloomberg News Bureau in LA right now and to Bloomberg News managing editor for media and entertainment, Lucas Shaw. He's the force behind Bloomberg Screen Time and writer of the Screen Time newsletter. Lucas, I don't know. I was listening to that conversation live when you were doing it with Greg Peters, and it sounded like the builders, not buyers part really stuck out to me, and talking about the history of mergers that have gone sour in the industry. But it sounds like, at least according to your reporting along with Kelsey, that they could be in the game for it.
Well, I think the build, not buy is still the Netflix mantra. It's a company that has avoided doing major M&A throughout its entire history. Some of that informed by co-founder Reed Hastings' experience at his prior company, a software company, where that kind of grew through a lot of mergers and it didn't end very well for him or for the company. But they do take a look at everything. They study it, they run the data. And I think Greg Peters' colleague, co-CEO Ted Sarandos, has always been kind of enamored of studios and lots. And if they could get their hands on Warner Brothers, the studio, and perhaps more importantly, the characters and IP that Warner Brothers owns and that HBO owns, that's something that Netflix would be very interested in. They have no interest in the cable networks like TNT, TBS, CNN. I don't even think they have very much interest in the HBO streaming service because they can just feed the content into Netflix. So if there's a way to do a deal that gets them what they want without the stuff they don't want, they're open to it. But my read on the situation, even though we have reported that Netflix and Comcast are interested, which is true, is that you've got one very clear interested party in Paramount, and you have a Warner Brothers Discovery wanting to either get a better offer from them or find someone else or have more leverage in these conversations. And so they're basically saying, that's it, we're for sale, come and make an offer, and they want to get as many people in the tent as possible so they have as much leverage as possible.
All right, so Lucas, Warner Brothers, as you said, rebuffed Paramount Skydance's initial takeover around $20 a share for being too low, according to those familiar. So is this still a live deal? Are we expecting Paramount Skydance to come back?
Yeah, definitely. It is still a live deal. There are still conversations happening. I think there have been reports that Paramount has made several offers. They're clearly exploring how best to proceed. Do they need partners? Do they need to be hostile and go public with it? You know, what is the number at which the Warner Brothers Discovery board has to say yes, even if management doesn't want to do the Paramount deal, because it would likely lead to their dismissal. But I would not expect Paramount Skydance to walk away just because they're in kind of soliciting other bids.
Is it plausible for us to think that Warner Brothers Discovery could remain an independent company when the dust settles, that no deal could be done?
That's looking increasingly unlikely. I think it is possible that they go through with the split and do a deal after that, or come up with some arrangement in which there is still a split, but one piece goes to one of these buyers. But it's not feeling, because they're already going to split the company. So I think, a year from now, 18 months from now, the odds of Warner Brothers Discovery being a whole and independent company are incredibly unlikely. But what exact shape it takes, we don't know yet.
So let's play out the Netflix part of this a little more, Lucas, because I'm intrigued with the idea of Netflix actually getting the studio, but not being interested necessarily in the legacy TV networks that are part of Warner Brothers Discovery. What would happen to that legacy side of the business if the studio were to get sold to Netflix or another buyer?
Well, it's hard to know because I don't think they're progressed enough in those talks for me to have the answer. But look, Warner Brothers Discovery was already going to spin off its TV networks. It can continue to do that, right? It can say, okay, that studio and streaming business that was going to be one part of kind of one entity going forward, that can go to Netflix, and it's up to Netflix, or they can negotiate how the HBO network fits into that, or the HBO streaming service fits into that, or they can find another buyer for that, right? If they've come to an agreement, if they feel like Netflix has made a great offer for just the studio and the lot and maybe some of the HBO programming, maybe they can take the rest of that and package it up, and where Comcast, which is spinning out Versant, which is its cable networks, is interested, maybe those two can come together. Now, once you're dealing with these spin-cos, it gets very complicated for tax reasons about what you can and can't do, because one of the reasons they choose to spin is to save money on taxes. But there's a lot of, I think they are trying to project optionality here.
Well, for Warner Brothers Discovery, I'm assuming they want to get as much as they can for all of their assets. Can they do that by breaking it apart? Is that really the smartest route, but maybe more complicated, versus just getting rid of the company in one full shot?
Well, they clearly think that there's more value in the parts than they're getting valued at in the whole right now. That's one of the reasons they're doing the split spin, however you want to talk about it, because they think the parts are worth more than the whole is currently being valued at. So yes, I think they feel like they could sell the studios and streaming for almost as much as the whole company's trading at right now. The real question would be, if you do that, is there actual value in the cable networks that are left over? Which, I guess we'll find out. There's certainly not going to be as frothy a market for those as there would be for studio and streaming.
People who work there certainly hope there's value. Just real quickly, is there a clock ticking on this, or could this drag on for a little bit longer?
It could drag on. I spoke to an investor earlier today who said they'd be surprised if they saw this resolved this year. I don't know if that's the case, but they have opened up a process. You think back about how long the Paramount Skydance process ended up taking. It was a year before there was a deal, and then another year for it to actually go through. So I would imagine we've got at a minimum a few months left.
Okay, Netflix happening after the bell. We'll hear about their latest quarter and the upcoming current quarter that we're in right now. K-pop Demon Hunter is certainly going to be a star of the call. What else do we need to understand about today's report?
I mean, Netflix earnings, especially now that they don't report subscriber numbers, are a little less interesting than they used to be. It's a company that has been very steady. Investors tend to want fireworks. They want huge beats, and Netflix sometimes delivers that, but most often especially recently, I feel like they've delivered sort of modest beats. Most people expect them to post pretty good results. They had the movie this summer. They've had a steady stream of new programming, and Netflix has told us all along that their programming in the back half of the year is much better than in the first half. The question with earnings is always expectations, right? The street expectations for the company are already really high, so even if the numbers are pretty solid, they might not live up to what investors want or expect.
20 seconds. Lucas, does anybody really care now that there's like the Warner Brothers stuff? Is that what
they definitely care because,
okay.
Look, Netflix is a $500 billion company, so its results matter.
All right. So appreciate it. Lucas Shaw, thank you so much. Bloomberg News Managing Editor of Media and Entertainment, also the force, as we said earlier, behind Bloomberg Screen Time. Do want to mention some headlines crossing the Bloomberg terminal. This coming from Senate Majority Leader Thune, speaking to reporters at the White House just moments ago. He said he's hopeful this will be the week the U.S. government shutdown ends. He says they are planning another vote on the stopgap bill tomorrow. So that, of course, goes on. We are getting ready to enter, our fourth week?
Yeah, this is day 21 of the shutdown. Meantime, markets mixed right now. The S&P 500 up close to 0.2%. The NASDAQ composite down just shy of 0.1%. The Dow up to the upside of 300 points. That's 0.7% higher.
When we come back, we're going to get into what and who is an economy for. That one, Bloomberg Businessweek Daily, continues on this Tuesday.
It's 2:40 on Wall Street. I'm Alexis Christoforous, and the Dow Jones Industrial Average hitting an intraday record on the back of strong earnings from Coca-Cola and 3M. We've got the Dow up now 284 points. It briefly crossed 47,000 just a short time ago. The broader market is mixed, with the S&P 500 up nearly 8. NASDAQ Composite, though, is down 17. And gold and silver seeing their steepest sell-off in years as investors lock in profits over concerns that recent historic rally in the precious metals left them overvalued. Spot gold now down more than 5% right now. We have got gold still up 60%, though, so far this year. The Trump administration plans to buy 1 million barrels for the U.S. Strategic Petroleum Reserve, taking advantage of low oil prices to begin filling the depleted stockpile. WTI crude now at $57.82 the barrel. And shares of General Electric are higher after the company raised its full-year outlook for a second consecutive quarter as the jet engine maker cashes in on strong air travel demand and high demand for maintenance and new engines. We've got shares of GE up now 0.7%. And Warner Brothers Discovery appears to be the belle of the ball. The Hollywood studio and media giant reportedly receiving buyout interest from multiple parties, including Netflix and Comcast. Warner Brothers announced earlier this year that it would split into two separate companies. It's now rethinking those plans. Shares of Warner Brothers up about 10%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Let's send it back to Carol and Tim.
All right, and we will take it. Thank you so much, Alexis. Well, what and who is an economy for? It's a great question, considering that, as we have often talked about, Tim, not all individuals, as we know, benefit equally at any given time from an economy or economic environment, right? We talk a lot about the K-shaped recovery. Yeah,
coined by William & Mary's Peter Atwater. He did that years ago, and it seems like it's more prominent now than it was even just a few years ago.
Yeah, it definitely has been very sticky when we talk about our economic environment. So in this week's Women, Money, and Power, we are exploring how shifts in economic wealth, we continue to do this, increasingly those shifts toward women is creating huge implications on how vast sums are invested, philanthropy is done, and the way that wealth is passed on to the next generation. So with more, we welcome Ida Rademacher. She is Vice President and Co-Executive Director of the Aspen Financial Security Program at the Aspen Institute. She, on this Tuesday, is joining us from the New Jersey Performing Arts Center in Newark, New Jersey, where the first ever Aspen Ideas Economy Conference is underway, and it is all about entrepreneurship and shared economic growth. We should point out Bloomberg Philanthropies is a sponsor of the event. Of course, Michael R. Bloomberg is the founder of Bloomberg LP and Bloomberg Philanthropies. Ida, nice to have you here on Bloomberg. Tell us a bit more about why you guys wanted to create a separate event that was more focused on economic impact.
Yeah, thanks. Great to talk to you, Carol and Tim. This is indeed the inaugural and latest extension of the Aspen Ideas Festival, which is in many ways Aspen's front door, if you will, to all the different kinds of things we do. It's our 75th anniversary at the Institute. And when you think about when we were founded, we've been hearing about it lately as post-World War II, the big bang of institutions, the General Agreement on Tariff and Trade, the first time that the whole world went on the global currency of the US dollar as a reserve currency. It was a time when there was a real conversation in the world between communism, socialism, and capitalism about what was the right way to organize an economy in service of society. And when you fast forward 75 years and we look at international supply chains and a pandemic and all the different ways that we're experiencing seismic shifts in technology and politics, everything seems to be changing at once. And it felt like a really important time to go back to our roots and say, what's a first principles conversation about the role of an economy and society? Let's not ignore the actual reality of what's happening out here, but how do we ground a critical conversation about the global forces of change in an economy back in real places and real people? And that's why we're here in Newark to launch Aspen Ideas Economy.
Well, a lot has changed in those 75 years, including what's going on today and the demographic shifts that we've seen underway. The idea of immigration and booming in the U.S. and then coming to a pretty drastic halt this year. The idea of Americans living longer. That was certainly the focus of a discussion that you had earlier this week called Wealth Ownership and Lifelong Prosperity. Declining relative wages, frequent career transitions, concentrated wealth, slowing growth, eroding trust in institutions, straining social ties. Tell us a little bit about that discussion and what you took away from it.
Yeah, there's been a layering of conversations over the last day and a half already on exactly these themes. We are, in many ways, we had a big conversation this morning, both the governor and Reinhard Salan, the president of the Manhattan Institute, talking about immigration and H-1B visas and what has been the role of immigration in both re-energizing culture, but also the economy over time. But also how that had this interesting blend of opportunity when the native-born population in the U.S. was also growing. And now that you have a place where places, not just in the U.S., but when you look at Europe, what is the population decline looking like? What are the implications of that for the economy and for how that permeates through society? When it comes to workforce and the kind of this K economy, the K-shaped economy you talked about, it's not just a K-shaped economy in terms of the income distributions that are happening. It's also a K-shaped economy in terms of productivity, in which sectors are experiencing that and driving an average number that actually masks the really interesting conversation that's happening about the world of the essential economy and the world of the digital economy and where is productivity driving for. We're having a big conversation about AI and what we call the IP of AI. What is going to change people's ability to make a living from their own creative endeavors in this space. So, it's an Aspen Ideas Festival. It's meant to be modeled on the Jazz Festival. There's too much happening. There's so many ways to take things in. And if we do this right, people are walking away with some new, sticky ideas in their head that are going to help them approach their day jobs or the way they see the world with some fresh takes and some new eyes. Certainly this interesting conversation. Right. And Kevin Hassett said it last night about capital income and labor income. That's another big conversation.
Hey, one thing I want to jump in on because it really made us perk up when you mentioned the H-1B visas, because we just had a story across the Bloomberg about how Walmart has paused offers to candidates requiring H-1B visas, according to people familiar with the matter. And kind of just this being the latest example of how the Trump administration's $100,000 visa fees are disrupting workforces. You mentioned it, and I don't want to get political, but I do think about the economy is so tied to an administration. Is there a theme, a narrative that is coming out in regard to policies from the White House or from the administration, and whether it's good or bad for the U.S. economy now and going forward?
Yeah, well, it's a good question, and we've all been grappling with how this is and isn't political. The great thing about the conversations so far are with the set of economists that have been here. Part of this is just about what do we know from the past that helps us understand what is actually happening right now. The good news is that there's actually been much more lifting up of some areas of bipartisan opportunity. And some of that has been, last night, some of that was really around some of the work on employee ownership. This is a very driven by both sides. Even the issues of capital accounts from birth has real bipartisan support. A lot of the work on housing supply, lots of things. Whether or not it is a political issue, the economics of it are that supply and demand drive prices. Mm-hmm. And when we lower the demand, when we lower the supply of talent for jobs, what does that do not only to the, in the short term, right? In the long run, for whatever reasons people have an economic rationale of what it's going to achieve in terms of their goals. In the short run, there's a lot of disruption, a lot of instability. That's never good for markets and good for the ability to continue to keep a flywheel of economic growth going.
Well, great to check in with you. Good luck with the rest of the event, and hope we can reach out to you in the future. Love to continue this conversation. Ida Rademacher, she is Vice President and Co-Executive Director of the Aspen Financial Security Program at the Aspen Institute, and their event, their first ever Aspen Ideas Economy Conference, happening this week.
Hey, we are just a little over an hour from the close of equity trading on this Tuesday afternoon. The Dow up close to 300 points off the best levels of the day, but still up 0.6%. The S&P 500 up 0.1%. The NASDAQ, Carol, in the red, down about 0.1%.
Most read story in the Bloomberg. OpenAI looks to replace the drudgery of junior bankers' workload. We're going to dig into that in the next hour. Having said that, when we come back on this Tuesday, stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, coming up on the last hour of trading on this Tuesday, and you've got stocks bouncing around here, but we are up just a hair on the S&P 500, up 0.1 percentage point. NASDAQ 100, call it flat, just up 2 points. Keep in mind, we've got a bunch of earnings after the close, including Netflix, so we'll be watching for that one and breaking it down.
I'm Tim Stenovec, along with Carol Massar. Let's take a look at some stocks on the move today. We are joined by a Bloomberg News equities reporter, Alexandra Semenova. Alex, what is on your radar?
Always great to join you guys. A little bit of a sign of reassurance today for investors who just last week were worried about regional banks and what they were telling us about their credit health. Zions today reported that its profit actually topped analyst estimates despite a $50 million loss from an alleged fraud to a commercial real estate investor group in Southern California. Their earnings were pretty solid. They reported $222 million worth of net income today, just beating forecasts Monday rather, also charging off $56 million of bad loans for that alleged fraud. Last week, Zions had reported a credit loss of $50 million out of $60 million caused by that commercial real estate portfolio. And that kind of triggered some concern about credit given the other recent loan blowups from companies like Tricolor Holdings and First Brand Groups, but it appears so far that this is really contained. Goldman Sachs CEO David Solomon even today said that those were isolated incidents. So those earnings kind of a testament of that.
And we're going to hear from Western Alliance after the close today, which was the other bank along with Zions that folks were worried about last week for similar reasons. Let's take Airbnb. What's going on there?
Yeah, that's an interesting one because at a time when it seems like everyone is signing deals with OpenAI, Airbnb actually said not quite yet. We're actually not ready to partner up at this point. Its CEO, Brian Chesky, said that he didn't integrate his company's online travel app with OpenAI's ChatGPT because its connective tools, quote, aren't quite ready yet. Airbnb will monitor the development of ChatGPT's integration and may consider a tie-up in the future.
Is this a diss? Is this like a first AI diss?
Listen, I have been experimenting with certain LLMs.
Yeah.
I asked one a question today, and there's a little note at the bottom that says, make sure you verify everything. And I asked it a simple question, and then I double-checked with a different source, and it wasn't the right answer. And I said, actually, I think it's this. And the LLM is like, you're right, it is that.
Oh, gosh.
So the tech is not perfect.
Yeah.
Yeah.
By any means.
Yeah.
I guess
Gotta
a good
be careful
move
still.
by Brian Chesky to be a little bit skeptical here. And the interesting thing is he's actually good friends with OpenAI CEO Sam Altman and said that they'll kind of be working together. I know he consulted him on some of the development of that third-party feature. So perhaps in the future there will be a deal, but it's not ready to.
Maybe Chesky got a text. It's like, from Altman, hey, no drinks tonight.
Yeah, exactly.
We're not having drinks tonight.
Remember the conference?
Just kidding.
The conference a couple weeks ago, where they were announcing all the different partnerships. TripAdvisor was one of them, for example.
That's right.
And every time a company was mentioned, the company's share price would shoot higher as a result.
It's interesting to see kind of maybe a little bit of a
This was at the OpenAI developers conference.
You're right, like all those stocks that shot up based on their being mentioned. So maybe a critical eye is not a bad idea.
Got to point out, though, that Airbnb is up 1.4% right now, outperforming the broader market, even as it didn't.
Just because of this story?
I guess perhaps the mention of it.
Yeah.
Just doing well together.
Yeah, that's interesting. All right, take us to another earnings story.
Adidas. So it lifted its earnings forecast for the year amid strong demand for its retro sneakers. You guys have probably seen them. The Adidas Gazelles, I know they're so popular. Everyone's trying to get their hands on them. It also took some efforts to mitigate the impact of tariffs. The German sportswear company now expects to generate an operating profit of about 2 billion euros, according to a statement with preliminary results. That's about $2.3 billion. That is up from the previous forecast of 1.7 to 1.8 billion euros. And its currency neutral sales will grow by about 9%. It's had a really good 2 years. Its CEO said that it's trying to keep up that momentum, specifically with the popularity of those retro sneakers.
Haven't the Gazelles been around forever, and haven't they always been cool?
Everything is making a comeback now.
I never knew they were gone. I
think they were out for a while.
They were?
You were ahead of the game, Tim.
No,
Do you have a closet full of them?
I don't. No, I don't. I do have a Stan Smiths though. Stan Smiths, some Adidas Stan Smiths.
You don't have that? You don't have a bunch
I don't
of
have
those?
Gazelles. No, I'm not a sneakerhead.
Really?
Yeah, I know. Surprising.
But you have a bunch of sneakers.
I don't.
But you seem to well, not right now, but you seem to buy sneakers.
No, I don't. I wear the same shoes all the time. Yeah, it's hard to find.
Maybe we'll have to start.
It's hard to find comfortable shoes.
You just bought On sneakers, didn't you?
Yeah, they're comfortable.
Okay. All right. Didn't you have Hoka's before that?
Yeah, but that was like 3 years ago.
And there's something else before
Carol,
that?
we've been doing this together for a long time.
I know. I got to keep up better.
I'm on my second pair of sneakers.
All right. Not a lot of sneakers. Back off.
I'm a New Balance gal.
You are? Oh, everybody's buying New Balance
They're
nowadays.
very comfy.
That's what everybody says.
They're like dad-looking sneakers, but
they're kind of big, but they're comfy.
I'm not offended by that. It's okay.
All right, Alexandra Semenova, thank you so much. Check out our Stock Movers podcast, 5-minute episodes, biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. Sneaker Guy.
Sneaker Guy. Up 0.6% on the Dow right now to the tune of 291 points to the upside. The S&P 500 up a little more than 0.1%. The NASDAQ just down less than 0.1%.
When we come back, as promised, we're going to get to the most read story on the Bloomberg terminal about what the more than 100 ex-investment bankers are doing at OpenAI. Love this story. If you're watching on TV, the close is coming your way in just a moment, but do not go anywhere. Tim and I continuing right here on Bloomberg Businessweek Daily.